Hi, this is Mark with my analysis for the week commencing the 11th of June. Now, I caution you all the time about trading, not gambling, and particularly a couple of weeks ago I was talking about the New Zealand dollar with the news, and we had a similar event last week on both the Aussie and the CAD. So the AUD, the RBA surprised the market by raising the rate unexpectedly, and not only did they raise the rate, they also spoke about in the statement probable future raising of rates as well. Well, if at the end of the day the Australians are going to start paying as much out in interest as the Americans as we're getting nearer, then the Aussie investors are more likely to leave their money at home rather than sending it overseas, which would make the dollar stronger. Then later in the week we had the same scenario with the Canadian dollar. They surprised the market and raised their rates, and their comments also were seen as positive. Then again on Friday, their unemployment change was worse, but the figures in Canada, they're at a tenth of what they are in the USA. So kind of treat that with a pinch of salt. So as ever, for the week ahead, we need to pay close attention to what's coming up, and it's a biggie. So on Monday, it's Monday, it's a bank holiday in Australia. Tuesday, you've got the claimant count in the UK. This is a work of fiction for how many people out of work claiming benefits. The true figure is in the millions. Same in the USA. It's all been screwed with. USD CPI, core price inflation, important on Tuesday. And then on Wednesday, you've got PPI. And then Wednesday, you've got the biggie. What are the Fed going to do? Are they going to raise rates? Are they going to leave them alone? Are they going to cut rates? What are they going to say in the press conference afterwards? And as I tell you repeatedly, don't be trading this, because if it comes out positive and they've raised rates, it could still drop. And equally, Powell could say something completely different in the press conference afterwards. So this is one of those events of the month when London comes up to 4 p.m. ready to close, which is 11 a.m. in New York. I wouldn't take any new trades. In fact, I wouldn't take any new trades on the Wednesday anyway, but be mega careful with this, because the markets are waiting for anything. And that was shown, I think, on Friday, because there was only slight difference on the unemployment in the US, the claims, and yet there seemed to be an overreaction. As ever, if you are looking for what the heck's going on, we have James inside our blog is posting his analysis, and then this is Mark to Market, Mark Chandler, a very good strategist from Bannockburn Global, and he explains in detail what was going on Friday, what was happening all around the world, China, Asia, Europe. And as he says, Europe is contracted. Europe is in a recession. And I've told you this for months, that all the talk of Brexit being the end of the UK economy, ironically at the moment the UK economy is not in as bad a state as the EU, especially Germany. So this is what's happening in Europe, and then US, and then he talks about the rest of the world. So keep your eye on that. Let's go have a look at the charts now and what I am looking to do for the week ahead. So a few weeks ago on the dollar index, we got the break, and that was thinking, okay, for the summer this could make things easy. I anticipated it would struggle at the 55, which it did for a week. Then it's broken free again. It's broke through the daily 200. Woohoo, we're off to the moon. And it's come all the way back down again, and we're now stuck in this tight range, and we're coming into the summer. So what do we do about it? Well, first things first is patience. I showed you in May that the euro pound was not worth touching because it was trapped in a very tight range, half the time in around 30 pip range. It was simply bouncing off the 200 here and struggling and failing to break the weekly 55 here. And the gap between these two was 33 pips, and I explained there was pointless getting involved in this. The risk reward wasn't there, the potential reward wasn't there, and you have to be careful as well. Don't be greedy at the moment. Don't be thinking you're going to get 500 pip moves, because more often than not in this kind of market you're more likely to get a 50 pip move. So get stops to entry or nearer as soon as is possible. So this was the euro pound. What I said to folks the other week is we need a breakout, and I would prefer a breakout down rather than up. And the reason I didn't want it to break up particularly was there was bunches of EMAs, and then there was the trend line. So here on the euro pound we waited. I actually waited for a weekly candle close, and then I looked for the pullback, and this was the spot, and I got it to the pip, except the swap kept me out. The spread missed the blooming thing, and now it's gone 90 pips. But that is what we wait for, and that is what we need to be looking for the weeks ahead. don't get tricked into trading in these kind of ranges. Wait and be patient for the breakouts like this. We want the pullback again here on the euro pound, and also if not, go down to 4 hour. So I'm going to show you now some potential setups. I'm also quickly flicking through gold. I will buy more gold if we get anywhere back down near 1850, 1820, and definitely 1700s. Equally for silver. They're saying that in silver bought in June is usually the most profitable time of the year historically. And if I put a trend line in here as well as there, I am getting an intersection anywhere around 21. I'm also interested to start buying silver at 22, and definitely if we get down here. Bitcoin. Now, Bitcoin has suffered because of the SEC going after Coinbase and Binance, and also lots of different tokens. I still believe that Bitcoin has a future, and I believe Bitcoin will be a foil for the intended CBDCs that central governments are trying to create at the moment. So for me, I would be a buyer of Bitcoin if we get a significant drop. Last time we got a significant drop on Ethereum, I was a buyer at 1150, I think, and 1000. You can see it back earlier in the blog. I did have an order in at 850, which was here, and it just missed it by 20-30 pips. Ethereum has previously been quoted by the SEC as not being a security, so it's very difficult for them to go after it now. They look fools over the XRP situation, but Bitcoin, there's nobody to go after. That's the whole point. It's decentralized, there's nobody in charge. They're not trying to go after Bitcoin. Swissy. So the Swissy is one of those that is stuck in a range. This was weekly chart. So for 6-8 weeks, it was stuck in here. And I was showing you that the euro was a better bet because we had reasons for the stop on the euro. Now, the other week, I took this on a 4 hour, and I had shown you, I can't remember where I got in on this, but I showed you in the update during the week, I had moved the stop from initial position of 30-40 pips to 10, and then it got taken out by the news. But it meant instead of losing 0.5% of my account, it would have only lost 0.15. Now, as I am recovering from surgery at the moment, I didn't actually have any trades on my live account, so no damage done. But that is a good example of trying to get your stop closer at the very least to reduce the risk. And also, this was a classic example. The news came out negative for the US and tanked and went straight through. So the euro at the moment, we are again stuck in a range. And the range is we are bouncing off the 200 and we are bouncing back down off this area here, 107.60. And it's messy and it's choppy. What do I want? I want it to break and close up here, or I prefer it to break and close down here because then there's nothing in the way. The only thing I would do with the euro at the moment is go down to a 4 hour and see if there are multiple reasons for a stop. So you could, in here at 108, you got the whole number, you got the EMAs, a smallish stop, 20-30 pips for a potential 90 pip gain. So you could be in for a 1 to 4. Be mindful it will struggle here, so 1 to 2, 1 to 3. But that is the only way realistically when you're in these kind of rangy markets to be able to trade them. The other option is do what I do and is zoom out and just look for big moves on some pairs. And in these days, it's often better that less is more. Now the pound, I feel completely out of whack with the pound at the moment. I really don't understand what's going on. I don't like it, and therefore I'm looking elsewhere. AUD, now my bad here, I've left the order in on the demo account. You don't leave orders like this in on a weekend. You should just close them or not take them in the first place with the weekend coming up. But this is a major area of previous support and resistance. 78.6 fib, previous support and resistance, 200 EMA in a downtrend. We've had lower lows, lower highs. If it's going to stop anywhere, then that's the place for it to stop. If I wasn't in it and I was determined to trade it, I would be looking for this kind of candle pattern formation moving sideways here for a potential short. However, on this shorter time frame again, it could well be only a small move. And to be honest, the iron ore price went up on Thursday, Friday last week. It has since started to drop back down again, but there's a lot going on with the AUD. And once again, if it breaks and moves higher here, I would want it to break and close at least on a daily then I would look to long temporarily back up to at least 70. If not, the more patient approach is wait for it to get back up here and then think of a short. In here at the minute, this downside is risky, messy, choppy, better opportunities elsewhere. NZD, same again, you're looking for a pullback. Again, there's bunches of EMAs, not so keen. Dollar yen, now I do want to get back into the dollar yen. I showed you previously, I was in here, I got taken out in the end somewhere up here on the live account. I do want to be in this, and the ideal place is all the way back down at 135, but that's 400 pips away, so it's 3.5 days movement. Unlikely, but possible. So that is the A grade for me. Then when you start getting into the realms of the B grades, this is one of those I would be going down to the 4 hour. This is the previous major support and resistance, and therefore that's the first area that we want to look. Now we need the support and resistance to support the theory. So once again, if it came into 13800, stop under here under the 200. We'd have a look on other time frames, see if there's anything else can help us down here. And then you've got potential 150 pip gain here, potential 300 pip gain here, and if this pans out as it should, then this could go 1,000 more pips. So I do want to be in a yen trade, although the Aussie yen might be better. This is the USD CAD. Now, I say on Wednesday, was it last week, there was the unexpected rate rise, and therefore the Canadian dollar gained strength and moved down. Again, this is in the make your mind up zone in here, 133. It's not broken this area since, well, it spiked in February, but realistically, this is a major area previous support and resistance. Once again, the more cautious one would be a break of here, pull back in, EMAs dropping down, or wait for a pullback all the way back down here. Again, the only other way to play it would be on a 4 hour. Now, I've shown you the euro pound. I showed you why you should have stayed out for the month. Now we've had the pullback. That was a perfect entry. That is where I will leave the entry. I'll move it down 5 pips just to be sure. So I would be looking at 86.30. On a 4 hour, you might look at 85.90 as well as, and split the order in half. Now this is the Aussie yen. Had this order in last week, didn't fire. So the Aussie yen, again, is 250 pips away. So it's 2.5 days worth of movement, but it often happens with this pair. So it's quite possible for it to pull back down. If it was to pull back down here, I have multiple reasons to suspect if it's going to bounce anywhere, it's going to bounce here at 91.55. You've got the 61.8 fib above, you've got the 78.6 below, you've got the bunch of EMAs and a lot of fresh air up here. So if it comes back into here, then that for me is definitely a forward order. The other option, what I might do, is put half of the order in here with a smaller stop and half in that current position there. New Zealand CAD, I have an order in back up here, 61.8 fib, EMAs, etc, etc. I am willing to wait for it to come back up here. Intraday, you could be watching anywhere around this 200. Pound CAD, so there's quite a few CAD cross pairs that are interesting at the moment, probably more interesting than the actual CAD. So the pound CAD, you've got 78.6 fib, you've got the 200 EMA, you've got previous support and resistance. In an uptrend, after a breakout, consolidation, if it's going to stop anywhere, it's probably going to stop there. So I have the order at 164.50 and the stop below the whole number and the 55 EMA. Aussie CAD, another potential Canadian cross, not as solid as the other one, but Aussie CAD, I would be more interested if it spikes up to here, perhaps with some news. And an area to watch is here, not as strong as the other ones I've shown you. Similarly, the EURCAD, what I would like with the EURCAD is it to break and close below here. You get the picture now. Pull back into here. Good place for the stop. Potential move down of 300 pips. Alternatively, and make a plan for both options. If it breaks and closes above 1.4610, 20, gets up here, then I would be interested to long, because again, you've a lot of fresh air up here. Final few, you got the pound Aussie. I don't like this pair. Ashley does. It's a very volatile pair. But once again, you have major previous support and resistance going on in here. So I said at the beginning, less is more in this kind of environment. Don't be rushing to take loads of trades at a time. Don't be greedy until or unless we see a significant breakout of an area like we've seen with that euro pound. And finally, with that euro-pound, you have the fundamentals supporting the theory as well, in that the EU is going into recession, and the forecast from the IMF, I think it was, where it could get worse, more so than the Brits. So interesting times, but that's what you want. Stacks of patience and discipline. Must keep your eye on the news. Less is more. Have a great week. Don't forget to like and share this video, and if you haven't done so already, subscribe to our channel.